Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up. And this is for Friday, the 25th of January, 2019. And we're just after 3:20 p.m. Central Standard Time. The markets will reopen in about 6-7 minutes, but this is where the settlement prices will come in, and I wanted to get that done for you. So what was this all about today that you got this big bump? Well, the market, once LaGuardia Airport was shut down, probably was the tipping point for everything. And what took place is the president basically said to the Democrats, I give up. Let's do a 3-week spending gap bill. If you don't give me what I want, I'll consider my nuclear option. But in the end, the president blinked. Market is up. People are going to get their paychecks, 2 weeks of them, because otherwise they'd have missed them again today, and I think that was just too much for the market to bear and for the Republican Party to bear. What about Democrats? They also. This whole mess is ugly. What can you say? But gold up dramatically, silver up sharply, copper up nearly 9 cents. Part of that is going to have to do with the Chinese delegation arriving in Washington now, getting ready for the next round of meetings, and people got their fingers crossed, hoping that good things can happen. Just yesterday, we saw nearly a full cent decline in the euro. Today it makes it back. So you want to talk schizophrenia, you're getting it. And what about interest rates? They don't know where to go. Up, down, sideways. Pretty crazy. So as we take a look at the monthly chart, what we're finally getting is a rally that is coming back up nicely. For the month, the chart is up 160 points. Next week, we finish out the month. The question is, can it get back to that 2689 level, which is the 18-month moving average of closes? There's no big magic to it, but I think you'd agree it'd be interesting to see it get back up to that number and see what it does there. On the weekly charts, the number's 2684. So the two tie together nicely. I wouldn't be surprised to see resistance there. For the week, we are actually down 6 points in the S&P. Most people won't think that. They'll think the market was up for the week. Fibonacci numbers. You're now in the top part of the box that I'm looking for. 2,700 is the 62% retracement. 2684 is the 18-week moving average. 2689, the 1-month moving average. So we've got resistance popping in around that number. If you get up and close over it, you know what you do, you throw the Fibonacci out. But right now it's still a bounce, and you're going to hear people say this is your opportunity to come out of the market. Others will say the market's bottomed out, it's ready to go. I'll let you figure out which camp you're in. I can tell you as a chartist that on the chart at least, what we have is still a pattern of lower highs. I can take this arrow and leave it right there, and lower lows. Now, should the market be able to get up and over last week's close on a closing basis, which was, well, actually, let's first take the high of 2677.25 and close over that number. Then what we could have is a pattern of higher lows, higher highs into that area. It's still a resistance area, even if the swing line turns up. And when you put the moving averages on, you can see you got up to the 100-day average and over it last week. Couldn't quite get to the 18, fell back to the 100 for the support. And everything I know as a charter says if you go up, the 18 weeks should be some resistance there. The lower Bollinger Band is far away. So I call it not in play, and the upper one is far away. So the market's dealing more with moving averages than those numbers, and momentum of the market is up. So what do we have? We have a market with the swing line still down, lower highs, lower lows. We've got a market that closed under the 18-week average. That's a downside bias. It's gripping for support at the 100-week moving average of closes, and momentum is still pointing up. As we come over to the NASDAQ, we look from the high to the low. We can see we're getting here too. We're at a 50% correction area in the market. Right through here is the 50%, and there's your 18-week moving average of closes coming in for the resistance. That number is going to be 68.39, so we're about 40 points away from that. When we step into the Dow, you rallied up to the resistance point this week. In fact, you got to 24,830. The resistance is 24,792, and you're going to close under that at 24,720. So the resistance coming in is the combination of a bounce off Fibonacci to the 62% retracement area, with, more important to me, that 18-week average. The market stalled at that. We'll see if it can go from here. What about the Russell? Same thing. Coming back up, you can see where the 18-week average is. Now, the difference in the Russell, you're not in the top box yet. There's more room for this to run. When you come to these other markets, you're in what I call these top box areas. They're getting a bit more mature, if you will, and worn out. We'll see if they can add from this, or if this is that bounce that so many traders are talking about. As for the VIX, it's just another week where the market's trading against, be it up, down, sideways, that 18-week moving average of closes. You'd have to take out 1717 now to create a pattern of lower highs, lower lows, which could give you an objective of the 100-week at 1417, and if that gave ground, 1178. Problem is, you got to get pretty bullish in the stock market for that to happen. And what if things go sour with this deal with China? We don't know what's going to happen there. So the good news is we're through with one deal for at least 3 weeks. The government shutdown has come to an end after a historic time of 35 days being shut down. Now we see what happens over the 3 weeks of negotiations. It won't be good. The Democrats did win the day, any way that you want to cut it. I think that's what the Republicans are going to say, and who cares? I want the people to get their paycheck. I want the country to operate. The president has the nuclear option. We'll see if he uses it. As a chartist, what do I know? I just look at charts. And when I'm looking at charts, I've got higher lows, higher highs. But if you take in the 10-year note out, not this week's low, but last week's of 121.02. You will then have a pattern of lower highs, lower lows, negating this uptrend that we've had, putting into play the possibility of getting back to the 18-week moving average of closes. No, even though the swing line would be down, the fact that you're over the 18-day average means the bias is up, so the two fight each other, but momentum is pointing down. In TLT, the popular ETF, you don't have a trend. You have the higher high, lower low resistance. I'm going to still say it's that 100-day moving average. It's a market that's digesting all that's going on. It was interesting to see that when the announcement started this morning that we're going to get to an end today of the government shutdown. I mean, it's not official as I'm recording, but the president has already said that he'll sign the bill, so it just has to get passed. And who's not going to pass that? That this market went into a distribution mode and started falling on interest rate futures, which means real rates were climbing. The dollar got up to the 100-week average of, the 18-week average of closes. I've got confused days and weeks here. And it kept the downtrend, lower highs, lower lows. Underneath that, still in a bear mode, in my opinion. I'm looking to see if the market can mount an attack eventually of the 100-week moving average and the lower Bollinger Band. These are weekly charts. I keep going back to daily in my brain. We didn't get any real follow-through in the Eurocurrency from the break from the ECB when they were so dovish, if you will, yesterday. For the week, you're up 29 points. That's pretty good. Higher high, lower low, no trend. The battleground's the 18-week moving average of closes. Momentum is up. There's just no trend yet in that market. The market that's probably surprised people is the British pound. It's gone all the way up, ready to attack the upper Bollinger Band, rallied into the resistance of the 100-week moving average of closes and the 18. Momentum's still pointing up. Obviously, there's nothing done, but the fact that the market's moved away from that puts you from the lower Bollinger Band to the higher one. It's a crazy market. In the Canadian dollar, a battleground is shaped up at the 18-week moving average of closes. You're not trending. You have a lower low, higher high. You're now trying to figure out what to do next. So let's do the what-ifs. If you cleared the 75.99.5, you would create a pattern of higher lows, higher highs. If you close over that, you could be putting into play the what? The 100-week moving average. If you fail here and don't take that out and back off, you're still without a trend. Difficult market unless it's deciding to go up. Japanese yen still looks like this was a blow-off area. The good news is Japan is seeing a little bit of core inflation come back in, but the markets, they didn't rally very much on all this 3 weeks of being shut down in our economy. If anything, this is a weekly chart. It's been falling back. First support comes in at the 100-week average, second the 18. It is still in a longer-term uptrend. It's a correction move that's occurring. In Bitcoin, the lead month goes off the board today, so there's no more January. Now everything will jump into the Feb, but you're still in a bear trend. Lower highs, lower lows, momentum still locked in bearish. In Brent versus WTI crude, when you broke to 687, you were able to rally back to the 18-week moving average of closes, and from there, from that 917 level, you've literally come back down to under the $8 difference. So our WTI has actually been gaining in value against the Brent part of it. And as we all know, Venezuela is very much up in the story. What happens to U.S. WTI demand? If we lose Venezuelan imports, we get about 500,000 barrels a day from them. It's going to be a very important part. The U.S. government is supporting the other government, as they call it, not Maduro's. Don't know what's going to happen here. It's something you have to keep your eye on. In the short term, if anything, I'd look for oil flow to get hurt, not expanded. If President Maduro gets out, steps down, whatever it is, you probably then start looking over the next 2 years for increased production eventually out of Venezuela again. Remember, their oil didn't go away. They just don't have money to get it. What you've got is the weekly bar chart still overall bearish. The resistance is the 100-week average. Momentum is up, as you can see. Bias is down. Trend is down. So we have divergence on this. In the WTI, pretty strong resistance. You can see right here the combination of the 100-day average and the 100-week average and 18-week average of closes. They all come in right here at that, let's call it $58 level. Momentum is up, but the trend is down. Lower highs, you haven't taken this high out. Lower lows, still overall bearish. Rebob gasoline, lower highs, lower lows. Momentum is trying to sneak up. It didn't succeed. You closed for the week down 6.5 cents. So as much as we want to talk that these markets want to come up, if you looked at the EIA and API numbers, they were very bearish. Nat gas, I don't know about you, but Chicago, I woke up, I think it was 5 below zero today. Went outside, I couldn't believe how cold it was, and we're going to get colder next week. Where's the bounce in the nat gas? If we get cold, East Coast is going to get cold. You know, travels, you get the jet streams. Looking at what's going on, though, this market's in a downtrend, finding its legs against the 100-day average of closes. Now, I don't know about you, but how I learned to trade, I was buying advisory services, and I couldn't wait at night for a phone call where I could call in, or I'd get a call, and it would tell me, buy here, sell there, do that. That was 40 years ago, 50 years ago. Well, I haven't lost that. I don't care who you are. You like to have somebody else's opinion. And the one thing is, none of us really want to read that much anymore. I think what we prefer is to watch a screen. With that in mind, I now do videos. And these videos are for my subscribers. I review 40 charts in the morning in the same sequence each morning as you have your cup of tea. Let's assume you don't like my sequence. I do them just in this way. Let's assume you only want to see stock indices and foreign currencies. Don't look at the rest. If you want to jump to the end of it, just grab the bottom of the video, swipe it, and away you go. And you're going to get from me the chart action, what I think the pros are doing, both my technical and fundamental opinion, and very, very specific trade ideas. So it could be a day trade, it could be a position trade. You're going to hear me talk through the market. Maybe you've already had your own idea, and maybe this pushes you into that direction you needed, or talks you out of something that you were questioning anyways. Who knows? The idea here is that I want to make it really to the point where you can't afford not to have it. What do I mean by that? $7.95 for 30 days. So we're talking on a business month, and that's how we do it. We do it 30 days at a time. You're going to pay roughly 38 cents, something like that a day max. Then you're going to get up into the $15 a month if you want to go monthly, but we're going to come out with a yearly option for you that'll be somewhere in between the $15 and $7.95 if after the $7.95 you want to just buy a year's worth at a time. How it works, I record at 8:30 in the morning. It takes about 10 to 15 minutes for me to do a recording. It then has to render and I post it. Typically by 9 a.m. Central Standard Time, you've got what I think in the market and away you go. Remember, we open up a lot of the options and the pitch rated vehicles at about 8:30. So I like to get them going because not everybody's a financial market person. They're cattle, they're hogs, there's other markets, the grains. So we wait for that, and then as they come in, you get a pretty good picture from what I think at least. Whether I'm right or wrong, heck, I don't walk on water. How do you get this? You can call my staff. You can go to our website, www.iraepstein.com. Under the word research or education, you'll see morning subscriber video. Click it and away you go. You can always click up here to get to that page as well. I'm Ira Epstein. See you on Monday.